Morgan Brennan is here. She's got some breaking news for us because an activist investor is now going after U.S. Steel, demanding some very, very big changes. What's happening?
Yeah, so this is all happening right now in real time. More drama, with it more questions about the future of U.S. Steel. Shareholder and activist investor Ancora releasing a 12-page letter to the board announcing it has nominated a majority slate of 9 candidates and is calling for the ouster of U.S. Steel CEO David Burritt. Now, Ancora is putting forward for CEO Alan Kestenbaum, who most recently was the CEO of Stelco, which was sold to Cleveland Cliffs last year. In the letter, Ancora calling on the steelmaker to abandon its deal with Nippon Steel, collect the $565 million breakup fee. This is a deal that, as we know, was blocked by President Biden, is now going through the court process. The investor asserts Burritt, quote, prioritized deal advocacy at the expense of financial and operational performance, since he collectively stood to gain $100 million from that sale going through. And Ancora says its slate's, quote, foremost priority is pursuing a public market turnaround of U.S. Steel, not trying to solicit alternative bids and sell the company. That statement may be what's actually sending shares of U.S. Steel lower, down about 1% right now in pre-market on this news. Now, U.S. Steel already out with a response, saying, among other things, that, quote, we remain confident that our partnership with Nippon Steel is the best deal for American steel, American jobs, American communities, and American supply chains. Breaking down the details of the deal, U.S. Steel's partnership, quote unquote, with Nippon Steel is the only path that enables the necessary know-how, technology, and investments to secure the future of U.S. Steel. Now, the company is also claiming Ancora's interests are not aligned with shareholders, that U.S. Steel is, quote, also concerned about the motivations behind these nominations, given Ancora's and Kestenbaum's recent dealings with failed bidder Cleveland Cliffs. It's a small industry, right? Cleveland Cliffs has not been shy about its interest in U.S. Steel. CNBC reporting just earlier this month that it may partner with Nucor for a bid. As for Ancora, $10 billion firm, it's known for campaigns in Norfolk Southern, RB Global, and Berry Global, among others. U.S. Steel disclosing that Ancora has a less than 0.2% stake in the company. Ancora already batting that down, saying, hey, you gave us a tight deadline for a nominee, and we're amassing a meaningful stake as we speak. So let's let the drama unfold here.
You have seen activist investors with very small percentages that have been successful, rarely in the past, but against ExxonMobil, there was the case where that situation played out, and they were successful in going through with it. There are so many accusations about how every side is compromised in this, from the management side to the activist investors. And what are they saying, that they were involved with Cleveland Cliffs before?
Yes. So, and let me just also say that later today, we are going to have Alan Kestenbaum, who is the CEO nominee by Ancora on Closing Bell Overtime exclusively. So we're going to dig into all of this further with him. Yeah. But Kestenbaum actually took over the Stelco assets, which are former U.S. Steel assets up in Canada, turned that company around, and then sold it last year to Cleveland Cliffs.
Okay. But they are saying up front that they're not looking to renew a bid with Cleveland Cliffs or with anybody else. They were very clear.
They're like, it's front and center, first page of this letter. This is about them being about a turnaround and keeping U.S. Steel as a public company.
The biggest issue with U.S. Steel and with the deal from Nippon has been that they were kind of appealing to President Trump, the incoming administration, saying, we know that he campaigned against it on the campaign trail, but we think he's a business. I mean, the CEO of U.S. Steel has said that he thinks he's a businessman and he can appeal to him with the logic for the deal. So that's kind of a long shot anyway.
It's a long shot. You got basically a 6-month extension by CFIUS to not enforce that executive order that was put in place by Biden. So this can all go through the court process. Also worth noting, in addition to suing the U.S. government, Nippon and U.S. Steel, they are suing Cleveland Cliffs and the union, the head of the union as well, because, to your point, all of the back and forth and sort of allegations of conflicts of interest and drama that this deal has elicited. Obviously, Japan, key strategic ally of the U.S., the fact that that the question was raised and the deal was blocked by the former president on national security grounds has raised questions, which is why I think this is even going through the court process, not to mention the fact that with the structure of the deal, it would have stayed a wholly owned U.S. subsidiary, and U.S. Steel, bottom line, end of the day, is in need of some sort of turnaround. It is in need of an injection of cash to update its processes for making steel. And that, I think, is why all of this has become such a big battleground, because you're talking about, right, a very famous, quintessential 124-year-old American company that has assets that need to be invested in and looked at perhaps a little bit differently, and everybody wants a piece at it. Everybody's looking to do it a little bit differently. But this is all going to play out here over coming weeks and coming months. So we're not anywhere near the end of this. We may not be near the end of this until summertime.